welcome everybody to the Go Squawk Experience number 19. We have Clayton Allen on the show today. He's a plumber by profession. He made a lucky Ford trade in the bottom of the markets in 2009. And ever since then, he's been hooked, watching and actively trading the markets ever since. He found Forex. He was drawn to Forex by the massive daily trading volume and 24/5 market schedule, which allowed him to trade after he finished working at his day job as a mechanical superintendent. He started making small but consistent gains each week on a small live account. He enjoys deploying EAs, which is robot trading. We'll definitely talk about that. And tweaking learned strategies into making more and more profitable trades. After 10 years, he's full-time a Forex and equities trader. He started Allen FX in August 2018 to help others navigate their own paths to becoming consistent traders and possibly supplement their own incomes through trading the markets with reasonable balance sizes. That's a really awesome bio. This is like the dream of Go Squawk, right?
Right.
This is what basically this is our path too. So very nice to have you on the show, Clayton.
Thanks for having me.
Joining us. Yeah.
Yeah, thank you for joining us.
So
so Danny, you in true Go Squawk spirit, what did you bring today for Clayton?
Well, I got basically the vibe that he was kind of like I don't want to say a working class type person, but he was very much hands-on, very much in the field. And I know whenever I was doing jobs like that, I was drinking vodka. So here we go.
Yeah, all right. I got my vodka. It's really water, but
all right. Well,
I'm more of a whiskey drinker, though.
That would be my next guess, but I'm all out of whiskey. So
yeah, I mean, I sound like a whiskey drinker.
You sound like a cigar smoker.
Yeah, cigars and whiskey. You know.
There we go.
Oh, there you go.
I'll drink to that.
Go. Okay, all right. So I think I got you beat on this one. I did take a look at some of your social media profiles, and I kind of cued in the fact that you live in Colorado.
Yep.
So that was pretty easy for me. So I basically went down to a local LCBO and I picked myself up a Coors.
Ah, there you go. Coors.
Born in Rocky Mountains.
Nice.
All right, I'm gonna crack this one
beer.
Yeah, it's not the greatest. I
you know what's funny is when I travel outside Colorado, I think I see more people drinking Coors Banquet beer outside Colorado than people in Colorado.
Oh yeah?
Yeah, I mean, in Colorado, it's more Coors Light. You know, that's the more popular one.
Okay.
But when I travel outside Colorado, people I see drinking Coors Banquet beer or Coors Light, and they're like,
okay.
Oh, I bet you it's huge in Colorado.
Yeah.
And Coors Light is, but Coors Banquet beer, they're kind of like, oh,
I'd
rather have Coors Light.
I personally have never tried this one, the original, before, and I've tried the other one, the light. I find it a little bit too watery for my taste personally.
Right.
But for this for this special podcast, I decided to give this one a try.
There you go.
Yeah,
that's kind of,
what's funny about Coors cans is I grew up, in rural Colorado, and my grandpa used to drink Coors Original, and we would shoot BB guns, and every time he would finish a beer, he'd throw the can out, and we'd try to shoot in between the two O's on the Coors. That was every time we got a new can, it was like, oh, perfect, we get a target, perfect new target.
Nice.
That's pretty awesome. Man, well, welcome to the show, Clayton. You had a very interesting bio. Let's start off with the genesis of your trading. So you, by the sounds of it, you got into the market during 2008, 2009 crisis.
Yeah. So I I got lucky enough at a pretty early age. I think it was early 20s. I had a relative pass away, and I inherited about $100,000. Me and my brother both, and of course my brother, wasted it. I don't even think he paid his car off. I think he just partied it away. And me, I knew I wanted to do something good with that. And I was in construction. I bought into part ownership of a bar. And at the time I was DJing, this bar owner needed some cash. And I had a lot of people tell me that's a stupid idea. And well, I worked the bar on the weekends, and I pretty much made all my money back in owner draws. And then after 2 years, my partner bought me out. So then I had, another 150 grand cash plus, I made another 100 grand cash. So I had quite a bit of cash. And meanwhile, I was still working full time as a plumber, coming up the ranks at a very large mechanical firm here in Colorado. And that's right when the markets crashed. And I always had this draw to the equities market or the stock market. I had never heard of Forex before. And so I had a bunch of cash. I know I didn't want to do, I didn't want to do construction my whole life, but I did enjoy doing it. And I didn't like how much work and drawdown there was with, investing in construction projects. Because when I built that bar, it never goes as fast as you think it will. It never goes on budget. And you're waiting so long to get your money back out of that investment. And you got to work at it. So I got drawn into equities, and, you could have bought a number of things in 2000, the crash of 2008 and 2009, and done extremely well. But why I bought Ford was, I remember I was watching TV, I was doing some research, and Obama just got in office, and, he was sitting down with everyone asking for bailouts. And I remember Ford leaving that meeting saying, "We don't need a bailout. We're good." So just something inside me said, well, they must have their shit together, right? I don't know if I could cuss on here, but
Go nuts. Go nuts.
they must have their shit together. So of course I did the stupidest thing you could do, is I took pretty much 75% of all that cash and I bought all Ford stock. And at the time it was trading at $1.42 a share. And before the crash, it was upwards of $30 a share. So 2 years later, it came back to $30 a share. And that's when I closed that trade. And I made just under $4 million on that one trade. And for me, I did what everyone tells us to do. I worked myself into a high level position at my company. By then, I'm a millionaire. A lot of people don't know that, because I kind of live a pretty frugal life. And I gave all my money to a money manager, and the slick guy in the suit, and you do what everyone tells you to do. Give your guy, some guy named Chad, and he's gonna go, manage it for you. Well, that next year, I think he made me like 6% in the biggest bull market of our lifetime. And it just wasn't enough for me, because I paid him 1.5%.
Yeah.
And, I was young. I told him I wanted to be aggressive. And now I was hooked. I started doing research on my own, and I was demo trading and, completely beating what he was doing. But, knowing that business, they're not going to put your money at a lot of risk, or they're not going to work really hard investing it to make good returns, because they're in the fee business, right? They just want to collect fees. So I knew I was going to have to do it on my own. So I started educating myself. That's how I found Forex, because at the time I thought, well, I work full time, so I need a market that's open, when I'm not at work. And Forex trades 24 hours a day, 5 days a week. I like to say 6, because Saturday's the only day a week you can't trade, at least with the broker I use. So knowing what I know now, obviously, that's the Asian market where I live here in Denver, and it's pretty slow during the Asian market. Yeah. So in the beginning, I just like every other trader, I went to YouTube University. And there's a lot more quality stuff out there now than back in, 2010. So,
yeah, for sure.
So, you go on that strategy hunt, and, you eventually start to pick up what works, what doesn't work. And then I started finding a lot of consistency with mean reversion type strategies.
Mhm.
where when price gets oversold or overbought, and, Bollinger Bands and RSI, and, I just wait for a certain, pattern, and I trade back to that monthly or weekly pivot. And I found a lot of good consistency with those type strategies. But I had this conflict, right? Because everyone's telling you, you got to trade with the trend. Well, I'm that type of trader. I always look for where that trend ends, right? Or where it's going to take a big breath and pull back. And I look for those pullbacks, and I trade in that pullback, not looking to continue. Now I had the problem. Well, I work full time. I have some strategies at work. I can't watch the charts all the time. So then, trading robots were really big. People were making some huge promises back then. I'm not
Still
a
do.
computer. I'm not a computer programmer. I'm not, very savvy on the computers, or at least wasn't then. So I kind of just looked. I was like, no way I'll ever be able to run one, make one. But eventually it just kept popping up, and I found an individual that was willing to sell his robot with the source code that was already trading mean reversion style systems. So then, I taught myself a little bit of MQL coding, and I've adapted it to, be closer to my strategies. And then what I love about running EAs is you can back test them really fast. So then I got it into, I'm going to back test 10 years on 28 currency pairs and, formulate, optimize these strategies. And that's pretty much what I ran the last 7 years. And, it's very consistent. It'll make 1.5% a week. The problem is you have to get used to having lots of inventory. And I look at trading as just like any other business, right? If you're going to run a mattress store and sell mattresses, you're going to have drawdown. You got to buy mattresses, lease a space, hire a marketing team. You're going to have all of that expense before you start selling mattresses and getting revenue. That's how I look at open trades. And if those trades are put in a highly probable spot that you have back testing to prove, and they're in a highly probable area, you just got to learn how to manage that portfolio like a CEO of any business, right? I'm let the robot take the trades. I'm just managing that inventory. And just like a cash flow business, I'm looking to get a certain amount of cash in versus how much more inventory I buy. And if that inventory starts to lose value, meaning it keeps moving against me, I got to make a tough decision, right? I put it on sale. I'll trade my way out of those positions. In the very beginning of auto trading, right, or robot trading, I kind of got lazy and said, well, I built this to just run without me. But I found over the years, the more and more aggressive I am at getting that inventory handled earlier, meaning discretionarily trading your way out of it, I get better results.
Yeah,
And
I could really attest to that. I made the first part of my career actually writing these things. And what I found was I was never successful with like momentum strategies or any of these strategies du jour, just because there is so much fuckery in the markets, right? There are people buying and selling out from under you. There, you have to compete with the HFTs. I was doing momentum strategies on equities. And, you never get the price that you wanted. Because you're competing with these HFT guys. What I ended up doing was making a portfolio management system. So basically, my thought process was, okay, if I can't compete with these guys at the very, very short term, let's try the very, very long term. Okay, and my background is data science and machine learning and stuff like that. So I did a bunch of heuristics on, okay, what makes the optimal, what the EPS, all that, the set of all fundamental factors I could possibly learn about a stock, what makes the optimal buy signal for 2 months from now, right? And so I was, and I would run it the same way you did. I'd accept a certain amount of risk management parameters. But you know what? We have a saying, don't be a dick for a tick. If you see that you're massively on side and, you've already in your mind kind of made your profit or your target, so to speak, even if the machine says, okay, it should be here, go ahead and take it. On the other hand, if a stock is really lagging, you don't just hold it for the sake of holding it just because the machine said you should. You have to actively manage it. So I think that that's a really good piece of advice for the would-be robot traders out there, is you don't just hand the keys to the kingdom to the robot, because there's a lot of things also the back testing doesn't take into account.
Right.
It doesn't take into account that interplay between the HFTs. It doesn't take into account things like slippage, and it makes a lot of assumptions on your behalf and that you wouldn't otherwise know, because for you it's just, okay, click a button. We just have to hope that the machine magics the trade in the correct way that it would when you're live, which is not the case.
Yeah, I mean, you're hitting the nail on the head of why I started Allen FX. Because when I quit, I went from being a plumber to the director of engineering for Four Seasons Hotels. And I got that job because I built a number of Four Seasons hotels as the mechanical superintendent. And I always kept in touch with them because hotels are notorious for destroying the asset. And I don't know, a lot of people don't know this, but the hotel brand never owns the asset. They always find a developer or someone in real estate to put up that investment. And then they will, basically brand it and manage that business for that owner. So there's oftentimes some conflict, right? Between the hotel wants to do some crazy stuff, paint graffiti for a pop-up restaurant, and then they don't necessarily look at the overall cost that does to the asset. So, Four Seasons moved into a brand new hotel, $400 million building we did here in Denver. And in 3 years, pretty much destroyed the entire mechanical system.
Oh,
and
God.
they tried suing me, my company, saying it wasn't built right? So that's how I got to know the ownership at Four Seasons, is I went in there and I had to educate them. I'm like, look, you hired a $12 an hour guy, a painter, and he's working on steam equipment. And then, you're melting pipes because you're sending too hot of water down the pipes because one guest said he wants hot water. I'm like,
Yeah.
whoa. So I ended up taking a job at Four Seasons.
Mm-hmm.
And that's when I got, a lot of extra time. I hate saying that, but going from construction, fast pace, one project to the next, they're never fast enough, never cheap enough, never safe enough, to all of a sudden a corporate environment where I have like 2 admin, they do my laundry for me. And all I got to do is answer emails and tell people what to do virtually. And so I had a lot of time on my hands, and that's when I developed that EA and, back testing it. But you hit the nail on the head. Everyone's looking for the magic pill. And, that's why the fitness industry is such a, huge industry. We all know what the secret is. Hard work. You got a diet. Yeah. And how I put that in trading is you have to do the work yourself. I could tell you exactly how I trade, and you won't have the same results because you don't have the callousing of the emotions.
Cheers to that, man. Cheers to that. What you just said there.
Cheers to that. We had the exact same.
I can't tell you how many times I fucking run into like prospect students who are like, just let me shadow you, or just give me your signals.
So the other thing is, like, they ask for signals, right? And that is fundamentally impossible. And it just shows how naive people are in their expectations, right? Because my trading account isn't going to be the size of yours, isn't going to be the size of his, or that person who's asking. Therefore, my risk tolerance is going to be different.
There's so many variables, man. Like the account size, the risk management.
Yeah,
exactly. So what we do is we have our morning little newsletter or a little briefing that we do where I just tell you about the markets. And I don't even say that this is looking long, this is looking short. I just say, here are the levels. Here's what's going on. Here's what happened in the news. Here's what my indicators are saying. So like you said, you have your indicators. I write proprietary indicators that are available to our subscribers. And we just tell them about the markets, right? And that's done a lot better for our students than to hold them by the hand and say, click here.
Right.
Yeah.
You're creating an idiot.
Yeah, exactly.
And
I mean, if you're gonna do that, why
I
not
will tell you,
be a money
I
manager?
ran a signal service. I still kind of do. It's kind of turned more into an education signal service.
Mhm.
And I
Yeah.
hate it. I hate it because it just copies exactly what I'm doing on my account. And then I just
Yeah.
I get firefoxed with a bunch of questions, right? Right when
Oh
I'm
my
trading.
God.
Why did you take that? It's like, well, did you watch the video 2 weeks ago? Because, I don't have time to explain to you what you should be caught up with. And
Clinton,
then, they get shaken off because they're not used to taking some
yeah,
drawdown, right?
Yeah.
And then
yeah,
they expect it's going to
And
instantly
then it's
go into
your fault.
profit and they don't have to deal with the pain. And then
yeah,
when they get shaken off and I have
It's your
different
fault.
results, they're
yeah,
like, why did, I closed it because it got,
yeah,
it was too much of a drawdown for me. Well, did you put 5 lots on? Well, yeah. And I'm like, ah.
Well, you know that saying, you teach a man to fish, fish for
Right.
life, right? I bet I smack my head every time somebody comes to me. They're like, please give me a fish. Like,
Right.
yo, the market doesn't work like that.
Yeah.
But
Yeah,
I really think,
you have to get into the flow. And
yeah,
in order to see the flow,
Well,
you got to put yourself through years and years and years of charting and sitting and watching it
yeah,
flow. And
absolutely.
well,
then
but here's the
then
thing. Like, you
once you
don't.
have that, then you got to get used to the torment, the thousands of decisions that go on every second you're in a trade.
Yeah,
Right?
Yeah,
Is price action still going the way we want? Is this
yeah,
a fake out? Right? Is like your momentum, right? One of the hardest ways to trade, at least for me, is breakout trading. Because it seems like you wait. Oh, it broke that level. And then, you wait for a retest, but it's never quite a perfect retest. So I always seem to just, get caught up waiting for it to pull too much. And then you get FOMO'd in, right? For me, I feel way more comfortable with setting that level and going, okay, it's struggling to break that level. I'm going to catch 50 or 60 pips as people are taking profit and possibly some bears or bulls are entering thinking it's a reversal. And I'm in and out. I want to be in and out, small move, and then, maybe catch that breakout of that momentum after I picked a few pips up.
Yeah, that's great.
that's really great.
Really
Great
good
advice.
idea, and I definitely want to touch on that in a bit. But first, it's like, with the signals people, it's like you can't necessarily fault them, right? Because we're living in this society that's a very like take a pill for everything kind of thing.
Right.
So they just think that it's going to be like that. So what we try not to chase them away or tell them we can't help them. We just try to steer them in a gentle way to the live streams, right? Because Chen is trading every day, and most of the time he's just sitting here like this, and then maybe for like 10 seconds he's in a trade, and then it's done, right? So we want to expose them to the reality of trading.
Right.
Well, no, I disagree with you, Danny, because I'm fortunate that the Go Squawk Live channel has like a lot of regulars that come and I can chat to them about the markets throughout the day.
Well, my point is you're not.
So the time I'm sitting here doing this, I'm actually talking to people about what's going on in other markets.
But my point is like you're not actually in the markets trading. You're idle.
No,
in
not
the trade
at
action
all.
sense. Like they're not going to see you sitting there scalping.
Yeah.
No, it's like one trade a day, if that.
Yeah. Yeah, and I actually wanted to ask you this question because through my experience, I always find out less is more. So nowadays, when I trade the markets, I usually don't like 3 is maximum for a day trade. You know what I mean? Like in a day trade, to me, I'm in like less than a minute. You know what I mean? So I'm not sure about like because you are doing the EA trading. Like, are you trading more? You find yourself trading more positions, or are you very selective?
So how the EA works, it will take lots of positions daily, like 40 or 50, but that's in a 24-hour period, right?
Right.
Now, what I've been doing recently, since I basically retired myself 2 years ago, and I tried just sitting at home and living off the robot returns and money I've made. And, I'm more of an investor in equities, right? Like one of my favorite strategies with equities is find a blue chip stock. If it ever hits the 200 period moving average on a daily, I buy it, right? And then I hold it forever. So I've done very well for myself, but I got super bored because, I have 2 kids now. They're twins. They're 5 years old. When I was working for Four Seasons, I was traveling a lot when they were born. And then, one day I was just like, I'm missing time with them, and I have plenty of money, and I have a skill where I could take, a small amount of money and just keep, growing it, because I've gotten through the banana head phase where I need to, make lots of money on a little account. So I kind of got bored. So talk about signal service, right? My first business idea was, because when I quit my corporate job, a lot of friends and family were like, "What are you doing?" Because I'm pretty secretive. They knew I was trading, but they didn't know at what level. So when I quit, really good job with Four Seasons, and to just sit at home and trade, a lot of people were like, "Well, if I give you 50 grand, will you trade for me?" And I'm like, "No, I want nothing to do with that, but I will send you my signals." Right. So I started a trade copy service where it would automatically, I built an EA that basically breaks down the position size for my account, because I was trading a very large account. And most of my clients had, I said a minimum of 10 grand, and I had a few clients upwards of 500,000. And for 18 months, we did very well, right? And I had some technical issues between the EA running on my account and sending, because it takes a series of rollover trades, which I know most people say is the worst thing you could ever do, is add to a losing position. Well, I found, that system, it works really well, right? If I'm oversold or overbought and divergence shows and I take a sell trade and it doesn't work, I wait for that same condition again, and then I size, a little bit bigger and try to roll my trade out. But I realized one big problem. I brought all these people into trading who wanted to never learn how to trade, and I just basically became their money manager. And when times are good, it was great. But when we got in a little bit high drawdown, a little bit of stress, when Trump started the trade war with China, I was long the Australian dollar pretty heavily. And it started going against us. I mean, it was well within my, 20% drawdown parameter, but I started getting texts, calls, people not sleeping, freaking out. And then I started to really realize they weren't using true risk capital, right? So people are like, "Oh, I can't lose this because I won't be able to pay my kids' college." I'm like, "Oh, all right." So
this isn't for you.
I slowly backed out of that,
God.
right?
Yeah.
And then, I went into building some online courses, and which I'm not sure really fit me, right? Because I'm frustrated with the whole business side of it, right? Because I like making content. I like doing live trading events. I like teaching people how to trade. What I don't like is building websites and, funnels and
all the back end stuff.
Right,
oh my God, yeah, it's such a pain.
I just
all the fun
I just want to trade,
stuff.
and you record me trade and go make money.
That's why I haven't been able to trade personally for months, because not to basically when we always respect our guest privacy when they come on and we're talking off the mic, but I figure I could share this, that I was kind of venting to you a little bit about my day, working with the back end team, the front end team, the website redesign, blah, blah, blah. And that's my day, right? I can't just sit there and trade, and you were mentioning how you kind of missed it just a touch, the socialization aspect. So don't forget, you can always become a member of our Discord. It sounds like you have a lot of experience. We'd love to have you be an active member. A little plug there for us, but you're definitely always, there's a lot of cool conversation.
The funny thing that you mentioned there, Clayton, is that yes, it's true. Danny does a lot of the back end stuff and he can't actively trade, but he doesn't have to handle all the stress that you're mentioning earlier, because I do some of the live trading, and I'm getting messages from people who are like, "Hey man, can you tell me about Euro USD? Hey man, what's going on with Aussie CAD? Hey man, what's going on with this currency pairing?" I was like, "Yo, do your own research, do your own due diligence. That's not my job."
Yeah,
But
it
I'm
is.
getting all of that stress that you were mentioning about, all the psychological stress from people who are looking at trades, and they're reaching out to you, and they're trying to get they're trying to get validation or hope.
Right, confirmation bias, right?
Exactly,
Yeah.
My
exactly.
favorite one is when they just send me a screenshot of their MT4 with all their positions, and they're in way too many trades with way too big of position sizes. And they're like, what do you think of my portfolio? And I just go, just close them all. And they're
Yeah.
like, well, what? And I'm like, yeah, if you're asking me, that means you
Yeah.
already know you're in too deep. You already went past the pain threshold. And I go, did you get into these not knowing where you're going to get out? Not knowing where you're going to take a profit?
Oh
I call
man,
that
that's
I call that the
It's
Ouija board
better
trade.
just close
It's
it
a
right
Ouija
now
board
board,
and
trade.
yeah.
start over.
I
Kind of
have a
Ouija
really good
board their way into a position and hope for the best.
I have a
Yeah, I
really
mean,
good
the hope
analogy for that.
strategy is not a good
You
strategy.
know, I have a really good analogy for that, because I've been coming across this quite a bit recently with some of our new subscribers, right, and our new users. You know, I always tell them one of the most important things of entering a trade, doesn't matter which market you're trading, is the exit strategy, right? It's like you're watching a bank heist movie or like a botched bank heist, and you see the dude going in to rob the bank with his amazing strategy of just pointing a gun at somebody at the bank, telling us, put the money in the bank, put the money in the bank, and then he runs out, and then he gets caught.
Right.
Right? It's like 90% of traders, they get into a position and they have no idea where they're getting out or how they're going to get away with the money.
Well, one of the things I always teach, right, is everyone's so focused on that one decision, buy or sell. They put all the emphasis on that, right?
Yeah,
The
on the entry.
analysis, what's Bloomberg saying, my fundamentals, everything says, all this pressure. And then once they hit buy or sell, they're caught off guard with the thousands of decisions that go on every candlestick, right? And, if they've done all their analysis right, they know where that whatever system or trading strategy they're using or whatever, like you said, rob the bank. Once it's over, the money's in the bag. And then, if they didn't put a stop loss, or at least, like I say, a lot of times I'll use mental stops because
Yes.
I don't
You
like
are
to
the stop
have a
loss.
market order in there
Yeah.
because I really hate, because I trade a sizable account. And if I have a giant position on and there's not a lot of liquidity in the markets, however, Forex, I'm nobody in that market, but I, call it superstition or call it, conspiracy theory. I don't want to see my 10 or 15 lot. I don't want the broker or anyone to see where that position is. I know where I'm going to get out.
Yep. Stop hunting.
And, that's what I tell people.
Yeah.
When you first get into trading, set that stop, because you need that hard line, and you don't know what you're going to do with that pressure. And if it's not already set, you're going to wait and go into Hope Island and start saying,
Yeah.
oh, it's going to come back. It's going to come back. And then next thing you know, 40% of your account's gone.
Yeah.
And you go, what just happened? And
Yeah,
That's very good advice. Very good advice, because I see that happening to a lot of people. Like, what I like to say to people is that you are the stop loss. However, that doesn't mean that you don't have one. Okay, that means that you have one. It's very, very numerically specified, but you have to stick to it. So some people, they
Right.
just have to set it and forget it.
Yeah.
But the problem is stop hunting, and that does exist. That is a thing.
Yeah, I mean, if you got big order there and it's tight, right? Like a lot of the things I see early traders do is they want to be way too tight with that stop loss. Or like I teach people, where's everyone else putting their stop? Because we're all taught the same way, right? In YouTube University. Oh, if you're trading a momentum strategy and it busts through a level, you're going to put your stop below the most current low. And everyone else does. So I'm like, I'm going to enter there because price is probably going to go there, and you're going to see the battle between closing and opening positions at that level.
Mm-hmm.
And then that gives me the best chance. Or if I am running a stop loss, I'm going to go 5 to 10 to 15 pips past that level.
Mm-hmm.
So if we do dip down and it closes all those people's stops, I'm not part of that herd of people that, you know, put all their stops in the same place.
Mm-hmm.
I kind of randomly pick them, and then I size my, you know, risk to reward based on that random spot. Which, you know, early traders don't like that because they want it, all they focus is on how much money they're going to make. And when I get into a trade, first thing I focus on is how much am I willing to lose?
Yes, that's good.
Pretty much tell myself.
Right? The key word is risk management. How much are you willing to give in order to make a certain amount?
Right. Yeah, it's just like any other business or investment, right? If as a plumber, am I going to take on this project that none of my guys know how to do? It's some space age material we've never used. It's a really tight schedule, so there's no time to really figure out all this newness. And the margins are about the same as a job I could take that I've done 100 times, and I know what to expect. Duh, I'm not going to take the high risk job. So in trading, I don't get how people can put a trade on without knowing exactly where they need to get out, because you're just, I'm just going to throw a trade on and hope that it's the big winner of the day.
Spray and pray.
It just never works out that way. And they end up taking big losses.
Clayton, can I ask you a couple of questions?
Sure.
What's your background, if you don't mind me asking?
So obviously,
no, like origin, or your origin, your nationality origin. Like,
so I'm your typical white guy, right? I grew up on a farm in northern Colorado.
Do you have any European descent?
I'm not sure. I haven't done the DNA. I do. My grandma was German and spoke German, so I have some German in there.
So I got a double for this episode, and I picked a German Weizen Doppelbock.
There you go.
Nice.
It's pretty easy to tell, though. I'm blonde hair, blue eyes when I had hair. You know.
So
I made it to like
same with me, but I'm Hungarian, so.
My other question for you, Clayton. This is the serious question. Cheers to that first. But so do you? Because you're trading FX markets, right? Do you dabble in the futures market at all? Futures Forex market at all?
No. And I probably should tell you guys like what I've been doing recently, right? I have the robot running on, you know, a decent sizable account, but recently I've taken on this project because I have more time and I'm trying to broaden my horizons. Historically, I've always told people to not do exactly what I'm doing. So recently I've been trying to get into more day trade scalp strategigs, which historically I've stayed very far away from because one, it takes extreme intense focus, right? And I kind of gravitated away from that. I was like, I'll let the robot do the focus and I'll just run the portfolio. But recently, you know, I've created some strategies that back test extremely well. And then even, Trading View replay test. So you can kind of get the emotion with it. And as the price flows, it tested really well. So far, what I'm trying to do is take a $50,000 account and can I never have more than 4% risk on at any given time and never more than 1% risk on any given trade and try to make $10,000 to $15,000 a month profit. Back testing is done extremely well. Forward testing on a demo, it did everything I wanted to. And 2 weeks ago, I started a live $50,000 account and just completely fell apart the last 2 weeks. It was a phenomenal emotional experience for me.
Now, was that because of the market environment or?
No, it was all trader error, right? And I'm documenting this process because I trust the system, but it was just amazing how the emotion of going, wow, I don't want to take this loss. So I would move my stop loss and then end up taking 2% loss on a trade and be like, what am I doing? I'm like doing what new traders do. And then I found myself revenge trading, right? All of these things coming back, and what's awesome is like all my followers have my MyFX book link to my live account. So they've been able to watch in the last 3 weeks this torment of, yeah, I lost $14,000 in 2 weeks on that account. And it's just amazing how quick that happens.
But this is a very, very good point, and I really thank you for sharing that, for having, to be so honest like that, because it just shows you that even if you are an experienced trader and even if you know the ropes, you could still succumb to the same beginner mistakes that everybody else does. And this is actually one reason why I like teaching, is because there's a specific module that we have that goes over these mistakes. And one of the reasons why I like teaching it is because it forces me to remember all those dumb mistakes and do them again.
Well, what's funny is I know them all and I teach them all, and I tell all my subscribers, and don't do this, right? And it was just, so I played the demo account very well. And what was really funny is or intriguing to me was, you take a 10-year veteran Forex trader. Historically, I'm a swing trader, right? So I go down the path of doing what I've always told people not to do, right? Because we all fall in this category with whatever's working for us. We just kind of go, what everyone else is doing may or may not work, but what you're going to get from me is don't do that, because I don't do that. So I'm trying to be more well-rounded, and I think I met a few Forex traders that are scalpers, and they do extremely well. So normally I would just call bullshit, but these guys shared their real experiences, some strategies. So then I started wrapping around, like, what can I do with what I like, which is pivots, right? I like weekly pivots, I like daily pivots, and I like to see what price does at those levels. And I have a pretty good idea if it's going to reverse or continue a trend at those levels. So I started to formulate that day trading, and it was just crazy to me how once I had $50,000 live account, how massively different it was emotionally than a demo or replay or running back testing. Because then what I found is in my back testing or even replay trading, I could look for the entry, set the stop loss, and just wait for price. And what's funny is you could just hit replay. You can get through, because I'm trading the hourly chart. So I could get through 15 hours of candlesticks in 15 clicks of the mouse. So you don't have that patience factor.
Yeah.
So in real life, it's all about patience and letting the trade go where it needs to go. And what I found is, I'm a full-time trader. I got my channel. I'm chatting with everyone. You put the trade on, and I didn't prepare myself for the amount of patience that I needed to be ready for. And most of all the trades I took losses would have went right where I wanted them to go, but I got shaken out with, oh my God, it's moving against me, and I don't want to take this loss in front of my 2,000 subscribers. So I'm gonna cut the loss off early, right? Or I'm gonna move the stop. I'm gonna give it a little bit more room, and then we all know what happens, right?
Yeah.
If I had a 20 pip stop loss, I give it 25, and it's 20. You just remove it all together, and then go eat dinner and come back, and you're like, oh,
yeah. We have a lot of disaster stories. We have a lot of disaster stories about
that happened to me yesterday. That happened to me yesterday. Oh my God.
The stupidest thing I did is I recently went to Idaho, and my setup is I'm looking for the hour before each session start. And I use the hourly candle, and I have a YouTube video on my Facebook page, Allen FX Facebook. I did a video on this strategy. I'm looking for a breakout of the high of that hourly candle. And then I just trade that direction to the next pivot level. So highly probable, 60% over 1,000 trades on all the U.S. pairs, right, during the U.S. session. Now, you got to be careful. You don't want to go in every U.S. pair on the U.S. session because you just put way too much risk on the U.S. dollar, because we all know what happens if Trump gets COVID and your technical analysis is no longer a factor.
We were saying that meme. Fuck your technicals.
We have that. We have that since Trump tweeting.
tweet
Fuck your
doesn't give a
technicals.
fuck about your technicals.
I will tell you, I was recording my podcast and I was short the US dollar JPY when at midnight the news came out Trump had COVID. And I went from, a $30 winner, barely make it, to $3,800 winner in like 15 seconds. And I had to pause the podcast. I'm like, something's going on.
Yeah.
Something's going on. And then Trump has COVID. So then I just closed all my positions and I was like, we got to reevaluate.
Yeah. You know what's crazy? Our AI software was able to pick up those headlines when it broke.
Yeah, that's what I was gonna mention, because the motivation behind what we do is that we are traders, right? Unlike a lot of people who just sell snake oil, we are making these tools to help us trade. Okay, so my indicators that I've coded, they go right along with my trading style. Okay, and we could share those with you at some point. But our headline detection system, basically an aggregator, but we also have an AI that judges the importance of that headline and whether it's risk on or risk off, right? So we had that really, without that, we would have been fucked.
Yeah. No, that picked it up like the moment those headlines were breaking, and it was like massively like risk off, buy US dollars, sell every other currency.
It was, normally I would have been sleeping, right? Because what's really hard at Forex is you don't know when to sleep, right?
Yeah. How do you get around that? Because it's 24 hours.
Well, that's why I'm developing this day trading strategy around. I get up at 4:30.
Yeah.
I look from the 4 to 5 a.m. Mountain Standard Time.
Oh, you're out in Colorado, so the time frame is different.
So I'm looking at that hourly candle. And then that's the hour before the U.S. session starts. Mm-hmm. So then all of a sudden, price will, if it pops above the high of that hourly candle or pops below, and usually I wait for a 15-minute candle to actually close, then I'll enter long or short, and my take profit is the next pivot level.
So you're essentially punting the open, right?
Yeah, basically, I'm looking at what price action did the hour before.
Right. Yeah.
And I'm looking for all those early, institutional traders. They're making, putting on their, doing their business. They have to do.
Yeah, you're basically getting the European lunch hour, like when after the European. Yeah. Okay, I get it.
And so when I test the London session, right, I use my midnight candle. And it works really well on the GBP and the Euro pairs. But really, you're just looking for a continuation of momentum in that session.
Okay.
Have you ever looked at bonds to trade?
I haven't.
No.
Yeah, because I just mentioned something that you had mentioned, how you're kind of open to trying new products, and that's something that we encourage everybody to do. Stick with the products that you know, but also don't close yourself off from learning new things, right? So your example with the the construction stuff, hey, maybe you're really fucking good at this one space age material, you just didn't know because you didn't take a class on it, right? And now you have the market for that. So that's why I wanted to mention to you bonds, is because it really seems like your trading style would go very well with bonds, because the types of things that you're describing are the types of things that I do, right? And so I'm a big levels trader. Okay, so bonds are really I don't want to say obedient, because the moment I say that, then they do something crazy, but you get what I mean, right? Like they have a higher probability of interacting with the levels in a way that I would expect, right? And they work very well with my indicators. So it seems like you have that same mentality. It would be really easy to write an EA for it, but my trading bot days are over, because I have other things that I have to devote my time to. But ideally, I would coding a strategy like what we do for bonds, I think would be very profitable. Especially the part what you said, what really stuck in my mind was how you look at the analysis just before open. Okay, because with bonds, you can tell what they're kind of thinking about doing because it's an institutionally traded product. If you look at what it's doing before the open, you tend to get some clues.
Yeah, one of the strategies I've kind of been doing a little bit on equities is you look at a really popular ETF and you put a Bollinger Band on it. And, typically those things are just kind of slow, always bullish. And anytime it hits the bottom Bollinger Band, like on a daily chart, you just buy a little bit. And then when it hits the top band, you get out of the position and wait for it to hit the bottom band.
That's pretty much like my entry level strategy that I talk about. If you're more on the conservative side, let's say you have, I don't know, 10 grand you want to put down, you want to start dabbling in investments. It doesn't hurt to, number one, look at ETFs like exactly in the way you just said, right? Because most of these ETFs are composed of blue chip companies or very, very large companies, such that we don't have to worry if this company is going to be here tomorrow. We don't have to worry about them being bankrupt. Therefore, that means that that's inherently more valuable when they take a dip. And the second thing is that most people don't even think about when it comes to equities is dividends. A lot of these ETFs that I could share my list, you could share yours. If we go down that list, most of them are going to pay dividends because a lot of these stocks pay dividends and they pass it to you.
Yeah, I mean, I went long. I went long Boeing when it dropped below 100, and I was telling my podcast listeners, I'm like, look, planes are falling out of the sky. COVID hits. And I was like, but there's one thing I do know. America will never let Boeing fail because it's second largest export next to oil, and we're not going to give up that space. So my target's 100. Gets below 100, I'm going long, and once it bounced to 180 about a week later, and it pays the 10% dividend a year. So.
Yeah, we were watching a lot of those, especially during the Corona apocalypse thing. We were watching a lot of these stocks with bated breath. I mean, you name it. I got into American Airlines, Bank of America, Apple most recently. I mean, with that dip, Apple, $1 billion, actually $1 trillion company, billions in revenues,
almost two.
Yes, exactly. So this stock you could get at one point for just about $100. And I said to Chen, I'm like, we are going to be high-fiving each other, laughing next year. We're joking about getting it on Apple in the $100 handle.
Yeah, and I FOMO'd in at 107.
I gave the recommendation at 107. Chen's like, eh. And then
I'm like 100. If it goes below 100, I'm getting an Apple. And it hit 105, 104, and then it bounced up. I'm like, all right, FOMO.
And he's like, all right, this is my shot. This is my shot. Yeah.
Yeah, I mean, I still have trouble not just hitting market order when I trade equities because, to day trade, you got to like bait them in, right?
Yeah.
You're between that bid and ask, and you can be like, hey, so then you don't just have to hit market order every time. You can get filled at a better price. I haven't perfected that process. So it's more of like, I need to look at long term. I'll just hit market order, and then it's a position that I could just hold on to for a long time.
Right. So with my Apple example, it's like if it's at 124, in a couple months from now, or 130 or whatever, I'm not going to sweat it too much that I got it at 107.24 instead of 107.16. You know what I mean? But if you're day trading, that extra little bit makes a lot of difference.
Every little 20 cents is
100%.
Right. And that's the emotional part. Like when I started doing the scalping and day trading with Forex that I had ignored or been able to bypass for the longest time because I just let my robot, it scans 28 currency pairs 24 hours a day. I just look at what it's doing and go, and then I look at the chart and be like, oh, it's on a runaway shit train. So I'm going to trade my way out at this level, position a thing, take as small as loss or, break even as possible, and then open the robot back up to do its thing.
Yeah.
Doing that day trading, I'm looking one of the strategies I put together on a 3-minute chart, right? And it's amazing how many emotions could happen in a 3-minute candle. Oh my God.
One thing I like to do, first of all, okay, so let me back up a second. In 2018, I had a buddy come to trade with me because he's one of these guys who would make 18 grand in one day, lose 5 the next day, make 5 grand, then lose 20. And so he came to me for some consistency, right? Because, I don't trade any more than like 3 a week, even if I'm day trading. Right. And so naturally I'll put a little bit more size on some of the orders to make up for that. But the issue is patience. Right. And a lot of people, my students would come to trade with me and they'd be bored out of their minds, and then they'd go and they'd, do something else, lose their money elsewhere. But every single trade I'd make with them was in the green. Right. What didn't come very often. And part of that was looking at where the action is and kind of playing the lower end of that, right? Because that when you're near a level, there's a lot of fuckery going on. Some people are spoofing. There's things coming in and out. So just don't even worry yourself with that. Look at the lower bound of that, because if you think about it statistically, we have like a bell curve, right? You're a price action guy, and I understood that from some of your analysis before. So you just want to get in on the lower end of that, right? And, the expectation not to enter a trade, not to enter trades here and there willy-nilly superfluously is going to force you to do that, right? Another thing that I see when people ask me, okay, why am I losing money? Why am I losing money? And, their trading strategy, what they're doing, I see where they're going with it. They just need to put their entry price where their stop loss is.
Right. Yeah. You hit the nail on the head. I look for that inflection point. Then I confirm that the bulls and bears are fighting at that level. And I don't care who wins at this point. However, if I feel like the bulls are going to win and it's going to go long, I'll wait for that attempt at the bottom of those, candles. And because like what I'm telling myself in that very moment is I know I want to go long. The market's going to go long. I've waited for the confirmation. Now I got to get it at the best price possible.
There you go.
It's like when you look in the fridge and damn it, I need milk. You instantly go, oh, I want to get it at the best price possible. So I'm not going to go to Walgreens. I'm not going to go here. I'm going to go to Sam's Club and get a bunch of other stuff.
I'm at a half a tank of gas right now, and I'm literally watching the oil market to determine when I'm going to top off.
Maybe that's just what a trader does, right?
It's like, you're a trader when you look at the weekly oil prices.
You're looking at – I'm not going to that Valero station. They're always 10 cents higher than the station over here.
Exactly.
But that's exactly how I look at the trade is I let my analysis tell me – I try to be as unbiased as possible until it's confirmed. And then I go, all right, I know I want to go long. I'm not going to jump in just because I know it's going long. I want to get the best price possible, which is going to give me the best risk to reward because you can always be wrong. So if I get that best price possible, I could put a tighter stop on that random spot or give it a little bit more room. And then let's say it does move. Let's say it's consolidating and I think it's going to go long or my analysis says long. And I get in on that price at the bottom of that consolidation pattern. Now, if it gets back to the top of that consolidation pattern and I'm in profit, and I see price action telling me it's going to go on another wave, I could take that little profit and just keep hammering the bottom side of that consolidation until I get that break, right? And I tell my students,
chip away at it.
Right, I tell my students, I'm never going to yell at you for taking profit, right? Or you should never give yourself negative affirmations that you close too early.
Yeah, no, that's a big pet peeve of mine when people say, well, I closed a 20 tick trade, but look, it went up to 40. And it's just like, look, asshole, you made it in the green. You have your risk management parameters because you never hear them bitch when they took their 20 ticks and then it went back to zero.
Right. And, oftentimes I say, if when you journal your trades, right, when you're in journal mode, right, not in the trading mode, and you're looking over and you start to see those habits, right? That's the time to work on them. Not when you're sitting at your terminal and you're plucking $50, $60 waiting for that break and, you journal all your trades. And then, when you do get that break, if you close it 20 pips too early, but it's a one-off anomaly from what your journal is saying, why would you beat yourself up? right?
Yeah.
Oftentimes, you know, I go, man, I made 1% today.
Mm-hmm.
I could have made 1.5, but I'm not going to project that negativity on me because I don't need it when I start trading the Asian session.
Yeah.
When I'm journaling on the weekends, when I'm reviewing my trades, and I'm like, man, I'm noticing I've slipped into this mode again. I'm leaving too much on the table. Doesn't mean the next few trades I'm not going to close too early. It just, I'm consciously aware that,
Sure.
hey, maybe I got to tweak something.
Well, this is one thing that we really stress is that your trading style should not be immutable. Okay, and what I mean by that is if you go through, and this is a very good habit to get into where you're journaling your trades, going through and reviewing them, and you see that the markets are in such a state where the runs are longer, then maybe you do have to change your trading style a little bit. But that's not done on the fly.
Yeah, there's nothing worse than when you're sitting at your terminal and you took a loss or you took a big win, and then all of a sudden you mentally feel yourself start to change your playbook, and you're like, whoa, not right now, right?
Yep.
I got to go, look at what the data tells me. I got to look at, do some replay trades.
Absolutely.
On it.
That's a very important point. That how I express that to people is trading is not about winning a single trade. It's about winning the set of all possible trades. Okay.
Right.
So we all know the story about the beginner who comes in. We had this plenty of times. We had one student. He turned his 2,000 account, got it up to 3,000. Then the next trade he got it up to 5,000. Then he went all in, got it up to 10,000, and then we never heard from him again.
Yeah. And he's telling you guys you're all idiots.
Yeah. Of course. So it's that confirmation bias of that beginner's luck that can be really toxic to people. That's why, if you're going to fail, at least we tell everybody you're probably going to blow up. Let's just hope it happens quickly with a small amount of money instead of boosting up your ego and having it with a large amount of money.
Yeah, I mean, a lot of people, I call them the Robin Hood heroes these days. They got $1,200 from a stimulus check, or they got laid off, and they had some money, and they open a Robin Hood account because Robin Hood's done a very good job at removing friction. Right? It's an app. The charts are shit, and it's funny because I've seen a lot of these Facebook groups pop up like overnight. Of people who've gotten into, trading Robinhood or Webull overnight, and they're doing amazingly well. And you could just see in their comments, like, oh, I'm crushing it. I took $50 and now it's $500. And, I'm going to put my whole life savings in next week and buy a Tesla. And I'm like, whoa, time out. And I was like, you're not a trader. You entered in the market, and let's just face it, in a very quick, one of the fastest recoveries of our time. And me, when I look at the chart, I'm like, that fast of a recovery, we're going to have a little bit of a pullback, and you're going to be buying Tesla at 509, and you're going to get hammered because you haven't experienced what it feels like for a position to move against you.
Absolutely.
And you're not going to do what you need to do when the time comes. Because, when I'd ask these people, well, what's your stop loss? What's the stop loss?
What's the stop loss? Yeah.
What's the stop loss? And I'm like, what? It's the level that you're going to get out. What's your profit target? Where I don't know. Tesla's going to the moon.
And their answer is stonks go up.
The answer is stonks go up. It's the bank heist with no exit strategy.
Right. You forgot the driver, dude. Oh.
Oh man,
Awesome.
Clayton, man, we can continue talking like this forever, man. I can get a sense you really got your heart set in Forex.
Yeah,
trading,
I love trading.
Yeah,
I've grown to hate the other stuff, right?
Yeah.
And I really enjoy helping people and teaching people.
We should find a way to work together somehow.
Yeah, that'd be awesome.
I just don't like the website building, the content making, because it drags me out of what I love to do.
Yeah,
right?
Always guest lecture with us.
Yeah, I'd love to.
Yeah, well, and listen, like I said, you can see, I like talking to people about trading because, when you're passionate about trading, And in the industry, you always find some type of way to wrap your life around this, whether it be business, trading, or teaching, or anything like that. And I can see the same thing coming from you. So if there's any way where we can kind of like work together, you know, share ideas or whatnot, that'd be amazing.
Yeah, I'd love to look at those opportunities.
And like I said, this conversation can carry on for hours because, you know.
Yeah, I mean, I enjoy watching you trade live, and I've always thought, man, I would love to just trade live, but then the content maker in your head comes, right?
Yeah,
are people going to sit there and really watch me, you know?
But you're right.
For a trade to form, and are they going to?
You get it though. You get it. Half the time, you're just doing this,
right? And then they're telegramming you. Why aren't you trading? It's like, I'm waiting, dude, for the right.
Yeah. So, listen, Clayton, it was a pleasure having you on the show. If you have any social media links or any websites that you want us to help plug you, by all means, just say it out now so everybody who's watching this can see and follow you.
Yeah, the best place I like to send people is my YouTube channel. Just search Clayton Allen or the Day Trading Plumber. I also have a podcast called the Day Trading Plumber Podcast. It doesn't get technical. It's usually just stories where I try to relate trading to real life, right? Like, plumbing.
Oh shit, man! Send us an invite.
Yeah, that'd be awesome.
Yeah, I'd love to have you guys on. I mean, I haven't had any guests on the show. It's usually just me and my producer, and he makes fun of my dyslexia because I can't spell words, and it just kind of turns into a banter type show. But we're looking at maybe we should bring some people on. We'd
love to be there.
I think we crossed the 100,000 download mark the other day. We
Congratulations,
probably
man.
have about 3,000 or 4,000 a week. I mean, YouTube, I usually do a market analysis every Sunday called the Sunday Setups. And, I'm really just looking at pivot points on a 4-hour or daily chart. And I'm just targeting those levels. Doesn't mean I instantly take a buy or sell when it gets in that zone. I'm just trying to tell my followers, like, hey, when price gets here, it's going to do something. Our job is to watch what it does and react to it and not get caught, right? Or not just say, oh, it's a support, I have to buy.
Yeah.
Well, it might be the time the people that make the most money in this market decide to crush you. So you got to wait to see, are they going to crush you this time, or are they agreeing with it? Because, unless you're trading billions of dollars in Forex, you're nobody.
Yeah,
right?
exactly.
And these banks, I always try to tell people, they're going to push price just enough down to sweat you out. And that's where we should be entering.
We call that the squeeze.
Right. They're just going to squeeze all of those retail
putting those vice grips on your nuts.
Yeah, and I hate it when I'm caught in a squeeze, but I know what it is, right?
Yeah.
You just got to grit that pain. And,
fight through it.
New traders just haven't developed that callus around that pain yet. And, it's amazing what people will do when they're in that situation. Double down trade, or, oh my God, close it right when it moves back to their position, and it's just, and then the torment.
Right at the bottom of the squeeze, and then it comes up.
Yeah, they're like, reverse it. Oh, no, lose it twice.
All right. Well, man, we can go on like this for another hour or so.
Really appreciate having you on the show,
We'll keep it at that. Clayton, thank you very much for coming on the show. As we always like to say,
keep
what
it
drink
spooky.
are you? Hashtag what drink are you? Hashtag keep it spooky. So cheers to you, buddy. We'd love to be on your show. We'd love to stay connected with you, and we usually air the show on Sunday at 6 p.m. So we'll definitely send you the link to the show prior to it airing, and you can share with all of your followers. And
I'll definitely talk about it when I record Thursday.
Awesome. Well, thank you very much, Clayton.
Thanks, guys.
Have yourself a great one, and it was a pleasure.
Yeah, happy trading.
All right.
What is Squawk's AI? Imagine political leaders like the US president saying we need to delist Chinese companies from US exchanges, or the Federal Reserve chairman saying the economy faces additional headwinds. What does that mean for the financial markets or financial asset classes like FX, stocks, bonds, commodities, or cryptocurrencies, and how would they react to such breaking news headlines? Without any context or an understanding of financial market jargon, traders and investors might have a difficult time understanding these breaking news headlines and applying it to trading or investing strategies. With the Squawk's artificial intelligence technology that's applying machine learning and natural language processing to real-time breaking news headlines, Ghosty is able to analyze and summarize in real time breaking news from relevant sources and social media to display risk sentiment analysis for any given asset classes, giving traders and investors alike an edge in the markets using AI technology. Ghosty is able to use NLP to understand the context of breaking news headlines and communicate this information to anyone, in any language, regardless of the native language of the original headline. By using similar natural language processing and machine learning technology that is found in Apple's Siri or Amazon's Alexa, Ghosty is able to become the virtual assistant for all financial market participants. Find out more about Squawk's artificial intelligence technology today at www.ghostsquawk.com.